I continue to believe Bitcoin is going to severely outperform the stock market. We saw Trump with his executive order get Bitcoin and gold into the savings account, into the 401ks of the everyday American, because bonds and stocks, the 60-40 portfolio is dead. It's over. It's no longer performant. Yes, the stock market is performant in dollar terms, but so is my iPhone. So is coffee. So are these headphones. Everything around you is performing in dollar terms, because it's a really fancy, complicated way of saying the dollar continues to go down no matter what, because we have to print it. What is performance in Bitcoin terms? Newsflash, almost nothing, almost nothing. So Bitcoin is going to continue to murder, crucify, outperform the stock market.
Scott Bessent almost let the cat out of the bag. In a recent discussion, he briefly misspoke about the US not buying Bitcoin, then quickly corrected himself. The truth, he said, is far more significant. Seized Bitcoin will form the foundation of a new strategic reserve under Trump's directive, and Treasury intends to keep adding to it. The message couldn't be clearer. America wants to dominate Bitcoin the way it once dominated gold. Jack Mallers explains why. The dollar has to be devalued against something. In the past it was gold. Now it's both gold and Bitcoin. By anchoring the dollar to scarce assets, the US can manage its debt burden while still maintaining global monetary leadership. But Bitcoin isn't the only piece of the strategy. Bessent also promoted the Genius Act, positioning stablecoins as central to US financial dominance. Stablecoins expand global access to the dollar, and since they are backed by treasuries, they generate new demand for US debt. In a world searching for yield and stability, that's a decisive advantage. Mallers adds that this explains Washington's growing friendliness toward digital assets, especially Bitcoin. Harvard's endowment has already taken a 9-figure position in Bitcoin ETFs, and New Jersey's state pension gained exposure through MicroStrategy. Institutions that once clung to the 60-40 stock-bond mix are realizing it no longer works in today's environment. What this really means, Bitcoin isn't just an investment anymore. It's becoming a strategic tool of US power, and the race to claim that ground has already started. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
When we think about the United States and its relationship with Bitcoin, we saw a viral clip of Bessent on the news where he, I think, misspoke and said that they're not going to be buying Bitcoin. To me, it didn't look intentful. It looked like just casual words that he didn't understand the gravity of how they were perceived. Within hours, he came out and he clarified, saying, Bitcoin that has been finally forfeited to the federal government will be the foundation of the strategic Bitcoin reserve that President Trump established in his March executive order. In addition, Treasury is committed to exploring budget-neutral pathways to acquire more Bitcoin to expand the reserve and to execute on the president's promise to make the United States the Bitcoin superpower of the world. So in case there was any question, any doubt, any confusion, the U.S. wants to be the Bitcoin superpower of the world. The U.S. is focused on accumulating Bitcoin. I continue to believe it's because you have to debase the dollar against something. That something is gold. That something is Bitcoin. Bitcoin is something that the American people can have access to through capital markets and businesses like 21, through physical Bitcoin, through businesses like Strike. This is why I'm working on what I'm working on, guys. I think it's going to become increasingly important that everyone gets access to Bitcoin. It will perform the best against the new era we're living in. Next, this was from Bessent this morning. Let me get my big head out of the way. Implementing the Genius Act is essential to securing American leadership in digital assets. Stablecoins will expand dollar access for billions across the globe and lead to a surge in demand for U.S. treasuries, which back stablecoins. It's a win-win-win for everyone involved, stablecoin users, stablecoin issuers, and the U.S. Treasury Department. This, not that I needed to prove the idea, but this is as good as proof gets. The United States' interest in stablecoins is to finance our deficits. It's to support the Treasury market. The Treasury market will be supported by its commercial banking system. It means all your bank deposits will be lent to the U.S. government. Do not own dollars. Buy Bitcoin. It means it will be supported by leveraged hedge funds out of the Cayman Islands. Okay? And it means it will be supported by stablecoins. Now, the interesting thing is stablecoins grow as Bitcoin grows. The best use case for stablecoins is they are the de facto reserve trading pair against Bitcoin. So if Bitcoin goes on to be a $10 trillion asset, stablecoins are going to have to 5x from here too. So the United States very well understands the best way to support stablecoins is to support this industry. They're going to be very supportive of this industry across all legislation and regulation. and they're going to be specifically supportive of Bitcoin. That, I think, is going to continue to be a story and continue to be a fact. And lastly, last episode, we talked about how Harvard, their penchant, had bought over $100 million worth of IBIT. So they now have a 9-figure Bitcoin position. And this was last week as well, that the New Jersey state penchant bought Bitcoin via MicroStrategy exposure. So I think this will continue to be a trend. You cannot survive on the 60-40 portfolio anymore. It's dead. It's dead, guys, and I'm not saying it as speculative. I'm saying that Scott Bessent, Donald Trump, the Federal Reserve, they have decided that the era, the post-1971 dollar era is over, finito, dead, gone, goodbye. That means bonds are going to continue to underperform. That means stocks, the overpriced bubble that are stocks, margins are going to start to compress. The dollar is going to get weaker. They're going to perform in dollar terms. They will not perform in Bitcoin terms. Whether you are an individual, a family, a business, a pension, a sovereign, an endowment, get you some Bitcoin. That is the strategy. That is the strategy. It's far riskier to own no Bitcoin than it is to own Bitcoin.
Stocks look strong if you measure them in dollars, but in Bitcoin terms, almost nothing is holding up. Jack Mallers argues this disconnect exposes the reality. The old 60-40 stock bond portfolio is dead and the future belongs to more complex assets. Trump's executive order has already paved the way, allowing Bitcoin and gold to be included in retirement accounts, such as 401(k)s. That's a structural shift, and one that Mallers believes will eventually crush the stock market. He points out that America's financial system is no longer built on production. It's built on financialization, cheap credit, buybacks, and offshoring labor to squeeze higher profits. For years, that worked, lifting share prices while hollowing out the real economy. But that model is breaking down. Margins are shrinking, debt is ballooning, and both stocks and bonds are showing stress. In moments like these, capital doesn't just disappear. It seeks safety, and historically, it has rotated into the hardest available asset. Gold once played that role. Now, Bitcoin, with its absolute scarcity and borderless accessibility, is taking the lead. Mallers stresses that no corporation, government, or central bank can change its rules. That immutability is what makes it unique. Let's get back to the interview.
I continue to believe Bitcoin is going to severely outperform the stock market. We saw Trump with his executive order get Bitcoin and gold into the savings account, into the 401ks of the everyday American, because bonds and stocks, the 60-40 portfolio is dead. It's over. It's no longer performant. Yes, the stock market is performant in dollar terms, but so is my iPhone, so is coffee, so are these headphones. Everything around you is performant in dollar terms because it's a really fancy, complicated way of saying the dollar continues to go down no matter what, because we have to print. What is performant in Bitcoin terms? Newsflash, almost nothing. Almost nothing. So Bitcoin is going to continue to murder, crucify, outperform the stock market. And what underpins a lot of my thesis? When people say, how do you know that? Is it just because Bitcoin scarcity? Yeah, you could leave it as simple as that. Is it just because Bitcoin's a globally accessible commodity and the US stock market closes and isn't available on weekends and isn't available to everyone in the world? Yeah, you can leave it as that. But you guys want a relevant, real-time approach to why I think the stock market is going to bleed over time against something like Bitcoin? Because the margins of these businesses are getting murdered. They're either going to have to pass these costs on to the consumer, so all of our iPhones are going to get more expensive, all of our cars are going to get more expensive, or they're going to continue to take the hit themselves. And that's going to get crushed on their earnings, on their balance sheet, on their profit margins. As I've said, guys, when the US hyper-financializes, it makes its living identity being the world reserve currency. That requires businesses to hyper-financialize themselves. That makes, you don't just produce things locally in America because you're a good American. Guess what that'll get you? Your stock shorted, you fired. That's what that'll get you. People in America want your stock to go up. People in America want cheap products. So you go build those products in China. And newsflash, everyone seems to care today. No one gave a shit where you made your products last year, 5 years ago, 10 years ago, 50 years ago. What they care about, it was cheap and your stock went up because your stock is in their 401k. That's all people cared about. And if you say otherwise, you're a liar. So now that we're imposing tariffs, the question is, who's paying? These businesses are paying. That means their stock is going to pay. If you think that businesses can take billions of dollars of hit on an annual basis and their stock isn't going to underperform, you're crazy. So this again is another reason that there's going to be a rotation out of stocks through this transition. There's going to be a rotation out of bonds through this transition. And capital will further find itself in the hardest thing you can own. Hard is in reference to how hard is it to produce more. Bitcoin is the hardest thing we all have access to. Not just everyone listening on this show, not just everyone in the country, not just everyone of America's allies. I mean everyone. I mean every single person with a pulse on this planet has access to Bitcoin, and it happens to be the hardest thing they can own.
Over the past 12 months, digital assets have also outperformed for many investors. 42% reported that their crypto holdings outperformed their stock portfolios, compared with 31% who saw their equities perform better. A majority of investors who hold both equities and crypto believe digital assets will outperform stocks over the next decade, according to a new survey. 65% of investors holding both stocks and crypto expect digital assets to deliver stronger growth than equities over the next 10 years. Power is shifting in plain sight. What once revolved around stocks and bonds is now being recentered on assets that can't be inflated away. The steady migration of wealth into Bitcoin and gold isn't just about returns, it's about survival in a system weighed down by debt and diminishing trust. If policymakers are openly preparing for this transition, it signals that the financial order itself is entering a new phase. As institutions and governments reposition, will ordinary investors recognize this pivot in time, or will they be left holding yesterday's assets in tomorrow's economy? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.